Welcome to Talk Tickers. We dive into earnings calls to pull out the essential insights for, well, experienced investors like you.
That's right.
Today, we're looking at Axon. They're right at the forefront of public safety tech.
And they just had their Q1 2025 call. Pretty strong start to the year, I'd say.
Strong is right. What were the headline numbers?
Okay, so revenue hit $604 million. That's a 31% jump year over year.
31%? Wow.
Yeah, and get this, it's their 13th straight quarter with growth over 25%.
13 quarters. That's consistency.
It really is. And profitability looked healthy too. Adjusted EBITDA margin was 25.7%. Annual recurring revenue, ARR, that crossed the billion mark, $1.1 billion.
Okay, solid numbers. What about looking forward? Did the bookings give any hints?
Definitely. They had record Q1 bookings, really set a positive tone for the year.
So that probably led to a guidance change.
Exactly. They raised the full year 2025 revenue guidance, now looking at $2.6 to $2.7 billion.
Which is what kind of growth?
About 27% year over year at the midpoint. So still very strong growth expected.
And the margin outlook?
They kept the adjusted EBITDA margin target around 25%, but they did bump up the dollar range slightly, $650 to $675 million now.
Okay, so a strong quarter, strong outlook. Let's dig a bit deeper. One thing that caught my eye was the change in how they report segments.
Right. That's a significant shift, actually. They moved away from the old Taser and software and sensors breakdown.
To what now?
It's now connected devices and software and services.
Okay. Why the change? Just better reflecting the business?
Pretty much. I mean, their product line is much broader now, isn't it? It's not just tasers. This new structure, it gives you a clearer picture of how the hardware side, the connected devices, and the software and services side are performing separately. It really highlights that integrated ecosystem they're building.
Makes sense. So how did those new segments perform? Let's start with software and services.
Yeah, that was really impressive. Grew 39% year over year, pulled in $263 million.
39%. What's driving that? New customers. Upselling.
It was actually pretty balanced. About half came from their core digital evidence management, getting new agencies on board. The other half was from premium add-ons, existing customers upgrading.
That split seems healthy, shows they can both land and expand.
Exactly. And there seems to be a lot of runway left on those premium add-ons.
How so?
Well, they mentioned that roughly 70% of their domestic users are still on the basic plans.
70%. Wow, that's a huge pool for potential upgrades.
It really is. And their net revenue retention, NRR, stayed strong at 123%. That tells you customers are sticking around and spending more over time. That's a powerful combination for recurring revenue.
No kidding. 123% NRR is fantastic. Okay, what about the other side? Connected devices, the hardware.
That's a solid growth too. Up 26% year over year, reaching $341 million.
And what products were moving there? Still mostly tasers.
Tasers were definitely a big part, especially the new Taser 10 and its cartridges. Demand is strong there. But it was broader than that. Their AB4 body cameras, fleet vehicle systems, even counter-drone solutions, and their VR training stuff contributed.
You mentioned the Taser 10. Is that catching on faster than previous models? I remember hearing buzz about it.
Oh, absolutely. Orders for the Taser 10 are coming in at about twice the rate the Taser 7 did at the same point in its launch.
Twice the rate. Okay, so that product is definitely resonating.
Yeah, it seems like the features are hitting the mark. Fastest Taser adoption they've ever had.
Let's talk margins for a second. What did the overall gross margin look like?
Adjusted gross margin was 63.6%. That's up slightly, about 40 basis points year over year.
And that's mainly because of the software mix shifting higher.
Exactly. More software revenue, which carries those higher margins, is lifting the overall average.
Got it. And operating expenses, were they keeping those in check?
Adjusted operating expenses were $236 million. That's up from Q4 sequentially. But as a percentage of revenue, it was actually down compared to last year.
So some operating leverage showing through.
Yeah, but they did signal they expect to ramp up R&D investment through the rest of the year. So something to keep an eye on.
Investing in the future makes sense for a tech company. Now, tariffs often come up. Was there any impact mentioned?
There was. They expect about a 50 basis point negative hit to their full year adjusted EBITDA margin because of tariffs.
Even with supply chain efforts?
Apparently so. Despite trying to diversify and offset costs, there's still a net impact. But importantly, They said they don't plan to pass that cost on to customers through price increases right now.
Okay, so they're absorbing it for now. Let's pivot back to growth indicators. Bookings sounded exceptionally strong.
They really were. Record Q1 bookings, like I mentioned, strong across the board, U.S. state and local, international, even emerging areas.
What specifically was driving the U.S. state and local strength?
A lot of it was agencies upgrading to their premium software plans, the OSP 10 plans, and also adopting Draft One, their new AI reporting tool.
Ah, yes, Draft One. That seems to be getting traction quickly.
Incredibly fast. It's become their fastest adopted software product ever. Nearly 30,000 active users already, just within its first year.
30,000 users. What's the appeal? Just saving time on paperwork.
That seems to be the core value prop, yeah. Using AI to streamline report writing is, well, it's a big time saver for officers. And it showed up in deals too. Several of their top Q1 domestic deals included Draft One.
And internationally, you said bookings were strong there too.
Record Q1 internationally, yeah. It sounds like there's a much bigger strategic push happening there now. The chief revenue officer is heavily involved, driving adoption of the whole suite tasers, body cams, cloud software. Seems to be paying off.
Okay. What about the general economy? Any worries about slowdowns affecting demand?
They acknowledge the sort of general macro concerns out there, but they said they aren't really seeing significant headwinds right now. Not from state and local, not from enterprise, not internationally.
Any exceptions?
The only area with a bit of uncertainty is the U.S. federal market. That seems dependent on budget resolutions.
Right. Federal can be lumpy. Axon's also adding new hardware, right? These fixed ALPR systems, automated license plate readers?
Yeah, that's a new expansion for them. Fixed ALPR cameras, like ones you'd put on a light post.
Seems like a logical extension using their camera tech.
Exactly. Leveraging their imaging expertise and, importantly, their existing relationships with law enforcement. It fits into that broader public safety ecosystem they're building. They also mentioned integrations with Ring and Citizen, trying to enhance safety, but keep privacy in mind.
And they have a partnership to help roll that out.
Yeah, with a company called Ubiquia. The idea is Ubiquia has existing access to infrastructure, like light poles. That should make deployment faster and potentially cheaper. Logistically smart.
Okay. Let's swing back to software and AI. They talked about an AI era plan. What exactly is that? More than just Draft One?
Yeah, it seems broader than just Draft One. It's their sort of strategic vision for layering AI across more of their products. Right now, they're identifying the key opportunities reporting, evidence analysis, maybe operational stuff.
So more AI features are coming down the pike.
That's the plan. They expect to start converting those opportunities into actual bookings more significantly in the second half of 2025. Draft One just had a head start because it launched earlier.
We touched on margins, but how does this mix of more software but also new hardware plus tariffs and R&D square with their 25% EBITDA target?
It's a balancing act, right? Software pulls margins up, new hardware tends to pull them down initially, add in tariffs and R&D spending, but they seem comfortable sticking with that 25% adjusted EBITDA margin target for this year.
So they feel they can manage those crosscurrents.
For 2025, yes. They mentioned they'll probably reassess longer-term targets later in the year, likely once these newer initiatives mature a bit more.
What's the customer vibe on these AI features? Any pushback, or are agencies eager?
It sounds like features such as the real-time translator are getting a lot of interest, not much resistance.
Okay.
They did acknowledge that some AI uses, maybe like vehicle intelligence, could face more scrutiny depending on the place, but overall, the enthusiasm for the potential seems high. Efficiency is a big draw.
And drones. They have that drone as first responder program. How's that progressing?
Yeah, DFR, it sounds like it's really starting to go mainstream. Adoption is picking up.
What's limiting it then? Regulations.
Right now, it seems more like production capacity is the main constraint, just keeping up with demand. They did say regulatory improvements from the FAA are helping, though, especially with waivers for lower altitude flights, which is key for DFR.
Okay. You mentioned the federal market uncertainty earlier. Are there specific opportunities they're eyeing if budgets do come through?
Definitely. There's talk about increased DHS funding in the FY26 budget focused on border security tech.
And Axon has things that fit there.
Oh, yeah. Their drones, their counter-drone tech from the Dun acquisition, real-time video, even the translator tool, all potentially relevant. Plus, their Fuzz platform is FedRAMP ready, or very close to full certification. That's crucial for federal contracts.
FedRAMP is a big hurdle. Good. What about the enterprise side? You mentioned logistics, retail showing momentum.
Yeah, it's growing. Seems like interest is picking up, though they noted the sales cycles for those bigger enterprise deals can be longer than with public safety agencies. Still, a potentially large market for them down the road.
Back to the fixed ALPR for a sec. That market already has players, right? How are they planning to compete?
It is competitive, yeah. They're reporting good early interest, though. The plan is a dedicated ALPR sales team working alongside their regular account managers who already have the agency relationships.
And when will we see revenue from that?
They're aiming for trials and early shipments by the end of this year, 2025. But the more significant revenue impact is expected in 2026 as production ramps up.
Okay. And they mentioned leader pricing for Draft 1 and the AI era plan. Is that just an introductory offer?
Seems like it. The idea is to create some urgency, get customers to sign up early, and really convert the sales pipeline they've built, especially here in Q2.
Got it. Their cloud services are a big chunk of revenue now, around 40%. What's driving that growth, more users or more services per user?
It's actually a pretty even split, according to them. About half the growth comes from adding more users, more agencies onto the cloud platform. The other half comes from existing users adopting more premium features and services. So growth on both fronts.
Okay. And the Dun acquisition, the counter-drone company, what's the strategy there?
Look, drones are a growing security threat, right? Military, government, even enterprise sites. Axon sees Dun as critical tech to address that.
How does it fit into their reporting?
Dun has both hardware and software. So the hardware piece will likely go into connected devices, software into software and services. They probably won't break it out separately anytime soon, especially given the sensitivity around military and government programs. Those tend to have long timelines and not much public discussion.
Makes sense. Okay, one last big tech piece. The Apollo cartridge for the Taser 10. This sounds potentially significant.
It really does. They expect scaled production in about a year. And Apollo. It could fundamentally change how the Taser 10 is viewed.
How so?
You might position it not just as a tool to incapacitate someone for arrest, but potentially as a self-defense weapon. A first choice in some situations, especially close quarters.
So less reliance on lethal force.
That's the core mission impact they see in the U.S., reducing lethal force incidents. The direct revenue impact domestically might just be from upgrades, maybe marginal.
But internationally?
Internationally could be huge. If it makes the Taser a primary defensive weapon, you could see entire patrol forces adopting it, not just specialized units. It could dramatically expand the market.
Okay.
Plus, think about enterprise armed private security. That's another big opportunity.
Interesting. With Axon becoming so central to police tech, are customers ever worried about being locked into their ecosystem?
It seems like those concerns might actually be lessening a bit lately. What they're hearing more is that customers value the integration, the seamlessness of having things work together on one platform.
So convenience is winning out.
Perhaps. And Axon does emphasize partnerships and trying to maintain an open ecosystem, which probably helps address those worries.
And competitively, are they holding their own? Losing any ground in, say, body cameras?
Their net retention is still very strong, as we discussed. And they explicitly said they haven't lost significant body camera contracts to competitors. Seems like they're maintaining their strong position there.
And the rapid Taser 10 adoption, do they think that pace is sustainable?
They seem confident. They attribute it to the product's features really driving faster upgrades from much older models, like the X26P and X2. There's still a lot of older Tasers out there to replace domestically, plus the whole international market. So significant runaway left.
Quick clarification, the margins on the AI era plan stuff, will those be typical high software margins?
Yes, that's the expectation. They said margins should align with their overall software business, so think gross margins north of 80%. The exact features are still evolving, but the profitability profile looks good.
And finally, any shifts in state and local budgets causing concern? Budgets tightening up.
They said they aren't really seeing significant changes impacting their business right now. Their sales seem more tied to operational budgets, which are maybe less volatile than big capital grants. So steady as she goes there, it seems.
Okay, that covers a lot of ground. Let's shift gears slightly. It's time for our This Is Not Financial Advices segment, where we toss out an outrageous but plausible trade idea based on what we've heard.
All right, let's do it.
Okay, idea number one. Given Axon's really strong international momentum, and especially the potential for that Apollo cartridge to, well, revolutionize Taser use globally, maybe you look at companies involved in specialized battery tech.
Batteries, why batteries?
Think about it. If Tasers become primary defense tools in potentially more diverse, maybe extreme climates internationally, you'd need incredibly reliable, high-performance batteries, maybe focusing on extreme temperature performance. It's speculative, of course. It depends entirely on Apollo being a global hit.
Interesting angle, connecting the dots there. Okay, my turn for an outrageous but plausible one. We talked about the federal push, border security, and FOOs being FedRAMP ready.
Right.
So maybe you look really closely at small, perhaps even private, companies doing secure edge computing, specifically optimizing data processing and real-time analytics from drones in tough environments.
Edge computing for drone data.
Yeah. If Axon lands big federal contracts for border surveillance using drones and real-time video, they might want to acquire or partner deeply with someone who has specialized tech to process that data securely and quickly right at the edge before it even hits the cloud. High risk, probably illiquid if it's private, but plausible if Axon scales big and federal.
Definitely high risk, high reward thinking there. Okay, let's wrap this up.
That's good.
So to recap, Axon put up a really robust first quarter, strong growth pretty much everywhere, leading them to raise their full year guidance.
Yeah, key drivers were definitely the Taser 10 continuing its strong adoption, Draft 1 taking off like a rocket, that AI plan starting to build pipeline, and solid momentum internationally and even in the enterprise space.
They're clearly investing strategically too in R&D, expanding the ecosystem with things like ALPR and the Dun acquisition.
And looking ahead, you've got potentially big catalysts like the Apollo cartridge's impact, especially internationally, and those emerging federal opportunities. Lots to watch.
Absolutely. Now, remember, everyone, these insights are purely for informational purposes. This is absolutely not financial advice.
Please do your own homework. Conduct your own thorough research before making any investment decisions.
We really encourage you to dig deeper into Axon's financials, their strategy, and the whole public safety tech landscape. Ask yourself, what aspects of their strategy or maybe their market position warrant your further investigation? Until next time on Talk Tickers.